Class 12th. I am Avnash Lambert, your economics teacher, and welcome to the online tutorial sessions for economics. Today we are going to continue with our second chapter, which is basic concepts of macroeconomics. Today we are going to start with the new topic, new term, which is factor income. Now what is factor income, my students? It refers to the income received. It is the income which is received by the factors of production. What are the factors of production? Land, labor, capital and entrepreneur. So these are the things, these are those factors of production are those who receive the income. For what? They receive the income for rendering factor services, because they give their factor services. They give the land, they give the labor, they give the capital. So these are the factor services. For what? In the production process. They render the factor services in the production process. Fine. Now, this income is received by land, labor, capital and entrepreneur. Fine. And how they receive it? In which form? They receive it in the form of rent, wages, interest and profit. Is that clear? It is that income which is received by the factor of production for rendering factor services for the production process. And example are rent, wages, interest and profit. In these forms we get the factor income. Now, factor income of normal resident. Normal resident, you already know. Normal resident of a country is included in national income. All those people whose economic interest lies within the country are called normal resident. Now, if a normal resident of our country is having rent, wages, interest and profit, then these things will be included in the national income of our country. Is that clear, students? Now, transfer income. What do you mean by transfer income? Again, it refers to the income received. It is also an income without rendering. Here, they do not render any services. They do not give any productive services. No productive services in return. They just get the income and they don't do anything for the production services. So we can say that it is an unilateral concept. And what does unilateral means? One-sided. One-sided transaction. We get the income, but we had not done anything for the production process. We had not given the land, we had not given the labor, we had not given the capital, and we definitely are not the entrepreneur. But still we get some income. In that case, that income is known as transfer income. Now, this transfer income is not included here. The factor income, this is included in the national income. But when we calculate national income, we do not add the transfer income. Why? Because it do not shows any production of goods and services. It do not show. Now, it can be received either within the domestic territory or from abroad. This transfer income can be billed from our country, from the domestic territory or from the abroad. From both the areas we can have the transfer income. Now, what are the examples? The old age pension. You know what is old age pension? The older people who gets the pension after they retire. So they do not invest anything in the production process, but still they get some money. That's the transfer income. Now, in unemployment allowances, those people who are unemployed, they do not do anything, but the government gives them the allowances so that they can have their families, so that they can run their families. Scholarships, the students, do they do anything for the production process? No, but still they get the transfer income from the government. Your pocket money, your father, your mother gives you money. Do you had anything for the production process? No, but still you got that pocket money. So it simply means from one's pocket to another pocket, from one's account to another account without rendering any production services. Is that clear? So factor income and transfer income are clear to all of you. Next topic for today is net factor income from abroad. Now students, what is net factor income from abroad? It is also known as NFIA in shorter term. but it's better to learn the whole term, because in a board exam, the whole term is being written and the whole term is being asked. There is nothing like short form they ask. They don't ask the short forms, they ask the full terms. The full term is mentioned whether in the numerical, whether in the definition. So net factor income from abroad. It refers to the difference between whom? Factor income received from abroad and factor income paid to abroad. The factor income which is received from abroad, from the rest of the world, from the outside the country. If the factor income is being received from the outside the country and we deduct the factor income which we paid to the other country, then it is called net factor income from abroad. Factor income, transfer income, normal residence, we all have covered in the previous topic. So it refers to the difference between factor income received from abroad and factor income paid, which we paid to the residents of the other country to abroad. Is that clear? Now, here is the formula which we can make from this definition. Net factor income from abroad is equal to factor income received from abroad minus factor income paid to abroad. Basically, it is received minus paid. Factor income received from abroad minus factor income paid to abroad. So, this is the formula. Learn this formula by heart because this will be needed in your numerical portion of the unit national income. Now, what do you mean by factor income received from abroad? By the normal residents of a country from rest of the world. Normal resident of a country from rest of the world in the form of salary, wages, rent, interest, dividends and return. By the normal residents of a country from rest of the world, all those people who are working in our country, who are from outside the country but they are working in our country, their economic interest lies in our country. Those normal residents of a country from rest of the world in the form of salary, wages, rent, interest, dividends and retained earning. Basically factor income from abroad. This is the income which we earn from the abroad. Now factor income paid to normal residents of other country. Factor income paid to normal residents of other country, that is non-residents. These are the residents, but these are the non-residents for their factor services. These are the non-residents. They do not reside in India, but they help our country to work. They provide us factor services. So in return, we pay them. We pay them as rent, interest and such other things. These are the non-residents. These are the factor income to abroad. So you got the difference between factor income received from abroad and factor income paid to abroad. Who are these and who are these? Understood? Now, so the next topic we are going to know about the how we convert national income into domestic income and how domestic income is converted into national income. Now first of all, let's revise what is domestic income and national income. First of all, let's talk about national income. Now, it is the sum total of factor incomes earned or generated. It is the sum total of factor income. What is factor income? Rent, interest, profit, wages. If you add them up, then the resultant is the sum of total factor income earned. By whom? By the normal residents of a country. What are normal residents? Whose economic interest lies within the country. He might or might not be the citizen of that country, but the economic interest lies within the country. Within and outside the country. No matter where he is living, if his economic interest lies with our country, then he is the normal resident of the country. And his factor income earned will be included in the national income during an accounting year. So once again, let's revise it. It is the sum total of factor incomes earned or generated by the normal resident of a country within and outside the country during the accounting year. Is that clear? Very simple. It's very simple thing. Now what is domestic income? Domestic income, the geographical boundaries. Remember, it is the sum total of the factor income generated by all the production units located within the domestic territory or geographical territory of a country. In our country, all the production units, whatever they are producing and their income, whatever income all the production units in India are producing will be included in the domestic income. Is that clear? It's very, very easy. All the production units and their income in India, inside the geographical boundary, whatever income they are earning, that will be included in the domestic income. Now students, let's focus here. We have got national income, we have got domestic income, and we have got NFIA also. What is NFIA? Net factor income from abroad. And what its formula? Factor income received from abroad minus factor income paid to abroad. We will calculate it NFIA. Now, we need to calculate national income from domestic income and domestic income from national income. Now, with these three things, two things will be given and you have to calculate the other thing. Now, suppose I have got the domestic income. I have got domestic income which is 10. Is 10 crore. Fine. And the NFIA, the value of NFIA is 5 crore. And you are supposed to calculate the national income. Now what will you do? What is domestic income? The sum total of the factor income earned inside the geographical territory. Now what to include so that we can have the national income? We will include the sum total of those people who are living outside the country. All those residents, normal residents whose economic interest is with the country but they are living outside the country. So we will include those normal residents who are living outside the country. So we will add the NFIA and then we will get the national income. If we add NFIA in the domestic income, if we add domestic income and NFIA, then we will get the 15 crore as the national income. Is that clear? Now, suppose let's shift the table. Now we need to calculate the national income. Just now we calculated national income, that was 15 crore. Now we need to calculate domestic income with the help of NFIA. Fine. Now we have got the income of all the normal residents of the country, living inside the country or living outside the country. Now we have to calculate the income of only those people who are living in the geographical boundary. Now what we will do? We will just subtract the sum total of factor income of those people who are living outside the country but are the normal resident. So simply what we will do? We will deduct the NFIA from national income. So 15 minus 5 is equal to 10 crores. So the value of domestic income will be 10 crores. Is that clear? If you want to calculate domestic income, just deduct NFIA from the national income. If you want to calculate the national income, just add the NFIA with the domestic income and you will get the answer. Is that clear? For national income, what you have to do? You have to add the NFIA from abroad from the domestic income. Just add both the things. And if you need to calculate domestic income, just deduct NFIA from the national income and you will get the results. Is that clear? Now, there is one more thing which they usually ask in 1 mark question. CBSE is very cunning in these type of question. What they ask? Can NFIA be positive? Can NFIA be negative? And can NFIA be 0? So here is the heading. NFIA can be positive, negative and 0. Yes, it can be all three of them. How? NFIA can be positive when income received is more than income paid. If we are receiving more and more and we are paying less, then it's a good thing, huh? it's a good thing. We will earn more. Our NFIA will be positive. And if we do the vice versa, if NFIA is negative, what if NFIA is negative? How is negative? When income received is less than income paid. If we are receiving less and paying more, then we are in a loss. Then NFIA will be negative. Now, what happens when NFIA is 0? How this happens? How NFIA becomes 0? When income received is equal to, they both becomes equal. Whatever we are receiving gets equal to the payment. I am receiving 100 crore rupees from outside and I have to pay 100 crores to the others also. Then it's a 0. It makes it 0. NFI becomes 0. And this scenario, under this scenario, when NFI is 0, the domestic income and national income of the country becomes equivalent. So here's your 1 mark question, students. How is it possible that domestic income and national income are equal? They can be equal when NFIA is 0. Is that clear, my students? Okay. So that's all for today's video. I hope you liked it. You are learning good things. You are staying home. You are taking all the precautions given by the government, and hope for the all the best. And stay home, stay safe.